All right, ladies and gentlemen, it is Tuesday, the 28th of July at 11:01 in the morning. Just wanted to give you an update. The ES is back in play. It just took a short at 74.50. It's currently trading at 74.46. The NASDAQ just hit a 2R. Okay, so actually this stopped us out one time today, and then it just gave us a 2R. So if you look over here, we got stopped out at 20, or look over here to the right. We got stopped out at $45, and then it just gave us a up to, if you decide to take the trade at 2R, a $90 profit. So we're up there. The ES, there was one loser this morning. If you scroll down here, you'll find it. But there was one loser this morning. But look at how tight the stops were there as well. So just about in everything today. Gold, even that was the highest risk trade of the day, $67. All right. Still, it's only $67. But look at this, $7, $6, $4. Often members call and ask, are those numbers right? And, we double check it, but those numbers are right. So, it's worth it taking that YM. If you have to take 3 trades in order to hook one, you lose $14 and probably hit the 5-to-1, right? So that math always works out. Look, I'm willing to risk $1 or $7 to make $21 all day with the right edge. Look at the ES. The ES is in play. I wonder if we're going to hit a profit. Let's see if it takes a profit and hits the 2-to-1 here. But well, what did we say? It went short at 74.53 quarters. It's 74.33 quarter right now. But let's keep an eye on it. But in any event, we're up there. The Dow, we got a 2R reached on gold. So there we have 67. What's that? $134. So if you want to take that money off the table, there's $134. I would take it because it looks like it's a pretty uneventful day so far. Which usually means it'll surprise us, which can mean. Okay, long, let's see what other, 2R reached on the Russell, 2R reached. That was at 9:45 this morning. 2R reached. And maybe you could have lunch on that. And re-entry. Okay, so this is re-entry. It's 10:57. Let's take a look at this because this was re-entry at 74.50. Take a look at where it is right now. Let's go to our watch list. 74. That's not right. There we go. 74. Oh, that's the 74.39. I just saw a ticket 74.38 and change. So 74.39. 40. So there's about 11 points in that. Let's see if it's yeah, it should have hit our profit already. But anyway, we already got 10 points. You saw it. You're on with me in real time. So let's take a look. 74.50. Oops. 74.39. So 74.30. I just saw a ticket 74.39. Okay, so there's already 11 points in it. If you want to take 11 points, be my guest. It's interesting is it didn't trigger the take profit. It must be because it's the re-entry and we're already up. But anyway, so we already got 2R on the NASDAQ. We already got a 1-in-1. We got a loss, a profit, and again, we're over here. We have 11 points, about 10 points in this trade already. So if you want to take a quick 10 points, what's wrong with that? What else do we have? I wanted to show you this for you bond traders. This is a new addition to our alerts. So if we go over here with alerts, you're going to see these. All right, you're going to see more of these. This is the curve flip. All right, so you have 2 options. You can trade the 5-year butterfly, or you can trade the ZF outright. So the trigger is on the ZF. Let me explain why. If you're a bond trader, the particular butterfly that you would take on the trigger would be the 2-year, 5-year, and 10-year. So in that butterfly, the ratio we recommend is 2, 4, and 1. So what does that mean? 2 plus 4 plus 1 is 7. That'd be 7 contracts. trading the ZF, the 5-year outright, is just more capital efficient. It is much, much easier to execute, even if you can trade the two butterflies. I'm sorry, the two pairs that comprise the butterfly. It's just easier. It's more capital efficient. That's why we put the ZF butterfly. And if you take a look, let me show you what the ZF did today, because that was at 943. Let's look at the ZF. Look at this, 943. There's 943, there's 935, there's 940, there's 940, 945 bar was right around here was the entry, 106, and the risk is only 6 ticks. So 6, if you trade the 5-year, it's 7.8125 a tick. Let's call it $8, so it's $48 risk per contract, and it's a 3-to-1. You get a warning at 2.5 to 1. This has been back tested almost 30 years back. All right, and I've traded this for, like I said, at least 10, 12 years. I've traded Treasury bonds for over 20 years. So, and I'm excited about making it available to especially bond traders. And what's cool about it is you are almost in the same position you would be, almost, as you would be by trading the butterfly, which is a hedged position, even though you're only trading one outright. Again, for capital efficiency. You can trade the butterfly if you want, but we go over that in our training. If you have any questions about that, we're going to really, really dig into this, because this is a bread and butter trade. This shows up at least 3 times a week with a very high probability of profit. And like I said, a 3-to-1 risk to reward with only $48 risk per trade. So I think that's pretty much it. Let's see. Look at this. Okay, ES went back in play, or still in play. NQ's in play now. Maybe we'll update this later today. So that's it. Again, Tuesday 11. I know I probably talked a little bit too much on this, but I wanted to give you, this is more for our members, but also if you're considering the platform, just a feel for what we look at. Okay, so that's it for today. Hope you're making money. Until next time.